Welcome to the Property Now podcast, where we talk all things property, investment, and new homes with your host, Matt Ellul.
Yes, there's bad debt. Yes, there's good debt. The good debt is not bad. It will never send you broke, ever. Rich people rely on debt to expand, because without debt, it's pretty hard to expand. It's almost impossible.
If you want to learn more about what's happening in the market and how to benefit from property investment, then go no further. We dig deep as to why our sector is a key to building financial security and safety for your family. Never before has it been more important to understand the playing field than now.
And I would say this is probably going to raise some eyebrows with some people, but your family home is not an asset. It is a liability. It's taking money out of your pocket from a cash flow position.
So let's get on with the show. Happy listening, and we'll see you on the other side.
Hello, and welcome to the Property Now podcast for the first episode of 2026. Now, it's been a little bit of time since we've released an episode, but we've been very busy, hence why it's taken a bit of time to get another episode out to you guys. Our downloads have still been very, very encouraging. We've still got lots of people watching the show and listening to the show. So thank you very much to you guys who are doing that. Please continue to listen on and hopefully you keep getting value from the podcast and what we're putting out there. Today I really just wanted to speak about a few updates, just a little bit more about what's been happening within our business so that people can stay on track and understand what's happening. There's been a lot of exciting developments in recent times with Buyfair Property Group and also Purchase Homes. There is another business coming into the fray as well, which has been released recently, which is exciting. And I think the main focus for me as the director of these companies has been to really work on our product offering to you as a consumer. Obviously, knowledge and education by way of releasing these podcasts is part of the way that we share, information around what we're doing, which is great. But I've been working very, very hard with some very intelligent people who have access to great resources within this industry for quite a long time to make sure that we can deliver the best products available. It's a very competitive space. There's a lot of property groups out there. There seems to be a different property group on every corner these days. I really wanted to stand out by delivering a product that is best in market. And I think that we're almost at that point where we can do that now, which is incredibly exciting. So I'm going to talk about that a little bit more towards the end of the podcast. This is not going to be a long one today. I just really want to get to delivering more of these episodes for you and bringing on some great guests. And we'll continue to work on that throughout the year. So today what I thought would be a good idea would be to just come up with 8 topics that can give you a bit of an insight as to what's going on with the market. As a whole, we'll go pretty broad. Where I see the best opportunities, from an investment standpoint. I think first home buyers are going to be really coming back into the space. There's some great government schemes and incentives available there that probably a lot of people don't quite know enough about. So maybe that's a topic for another day, but we can touch on that as well so that people have a bit of an insight as to what kind of opportunities are existing. So let's kick it off with the first point, and that's interest rates. RBA have hiked the interest rates to 3.85%, which is the first interest rate rise that we've had in over 2 years. The main reason for that is because inflation has come back higher than expected at 3.8%. The target inflation rate's at 3.5%. Unfortunately, it's the consumer that's having to pay for that. So it's the consumer, mum and dads, mortgage payers, people of everyday Australians that are suffering because of what I think is more to do with government spending and government overspending and mismanagement of money. We've all seen what's been happening, or maybe we haven't, but things like CMFEU, debacles where money's being wasted at the taxpayer's expense and the government not managing and doing anything about that in a quick enough manner is costing everyday consumers. And I think that the government needs to be held more accountable and do a better job of managing the money that we make for them, essentially, and pay them to manage. But I won't go down a rabbit hole. So unfortunately, interest rates going up. is not great news for the mortgage payer. It makes it harder for first home buyers who are trying to get loans from banks because the interest rates are higher and means that serviceability is down. And if cost of living isn't high enough at the moment, an extra $50 to $60 a month or $70 a month on a $500,000 loan for a mortgage payer is not something not news that's welcomed. So anyway, that's where it's at. House prices still rising, 0.8% across the country in January alone. The median house price is sitting around the $912,000 to $970,000 mark across the capital cities. I think it's important to highlight that there's some opportunities there with certain capital cities, and I actually highlighted this last year with where I think the best opportunities will exist, and I think that's still Melbourne as a whole. As median house price in Melbourne sits at about $830,000, which is well below the competing capital cities, cities like South Australia, Western Australia. Brisbane now has just rocketed, to a median house price of about $1.05 million. And Sydney's up near 1.3 million. So you're sitting with a median house price of $500,000 below, our biggest capital city, which in my professional outlook means opportunity, especially when you've got huge migration still coming into the state and the country in general. 118,000 people moved to Melbourne in 2025. It's putting pressure on housing stock. We're not building enough houses to be able to keep up with the amount of demand that's occurring within these areas and within the country. I mean, even regional growth, we're seeing it at a very high rate because people are looking for affordable options to get into home ownership. So very interesting. And I think most professionals are predicting that the growth will slow down a little bit over 2026. I probably tend to agree in most points. As I said, I think Melbourne's got that potential to perform a little bit better. I think we might see Melbourne sort of back up to that 6 to 8% growth standpoint in the next year, but only time will tell as to whether that occurs. We can never predict the future. I don't care how good you are at predicting the future, it's still very hard to do. So 0.3 inflation, 3.8%, which is essentially why the RBA chose to increase the interest rates to get spending down. As I mentioned again, I won't get into it too much, but it'd be good if the government could be held accountable for their spending. Point number 4, ultra low inventory. So we've got 25% below the average amount of listings on the market right now, which leans towards it being a very, very, very strong seller's market. There's sellers markets, there's buyers markets, and there's neutral markets. At the moment, it's very much in favour of the seller. So if you're thinking of selling, it's probably not the worst time to do it, depending on your personal position and where you're at. But there's a lot of landlords doing very well from a growth standpoint, which is why I always talk about not timing the market, but having time in the market. That's the most important thing. The longer that you have assets and the quicker that you have an asset to work for you, the sooner it is that you're going to have that position of leverage. You're going to have a foundation that you can utilise to then get into more assets. Too often I see first home buyers holding off. We're just going to wait a year, we're going to wait 2 years until we can buy that dream home, which quite often never comes because they end up chasing their tail. And we don't want that. We want you getting into an asset as quickly as possible so that you can start taking advantages of these opportunities. I mean, you look at the Perth market, which has grown at circa 20% per year for the last 3 or 4 years. People have doubled their net worth in 3.5 years, which is just absolutely nuts. It's a generational boom that's happened overnight. The market didn't do anything there for 10 or 11, 12 years. So it's hard to know what it's going to do. And then essentially overnight in 2 or 3 years, it's doubled. So pretty amazing outcomes for a lot of people over there. We had quite a lot of people make a substantial amount of money from investing in Perth. And it was an opportunity that we also identified pretty early on so that people could take advantage of that. So 25% below the 5-year average of listings available on the market. It just means that there's a lot more competition, there's a lot more demand than there is supply, and that's always the number one, determining law of price growth or decline. If you've got 10 people trying to buy 3 houses that are available in the market, there's going to be competition amongst those 10 people, and it will drive the price upwards. If there's only 3 people buying 10 properties, there's 10 properties available and 3 people wanting to buy them, it's the landlords that have to drop down, have to negotiate to try and be a better value than their competitors, which is the other 9 properties on the market. And this is why it's very important to understand the supply and demand law when you're investing in property or acquiring property, because it's what is really leading towards setting you up, especially if you can invest in areas where the supply and demand component is going to be in your favour. So point number 5, multi-speed market. So what we're talking about here is the areas that have been performing at just ridiculous rates, to be fair. And the 2 standouts, I mean, I haven't even mentioned South Australia in here, but you know, Perth and Brisbane. Perth in January alone grew 2%, so it's on track for 24% growth in the year. Brisbane up 1.6%, Adelaide up 1.2%, Darwin 1.5%, and Sydney and Melbourne 0.2 and 0.1% respectively. Regional WA 6% in 3 months to January. These are huge numbers. Keeping in mind that if you have an asset that grows at 2% that's worth $800,000, that's $16,000 that you've just earned in 1 month without doing anything. You haven't had to work for that money. It's invested returns. So, you know, it's on the second tier of earned incomes. You don't actually have to earn it, so it's not an earned income, but it's an income that you're generating, or a multiple stream of income that you're generating without having to work for that money, i.e. a job, trading your time for, you know, an hourly paycheck. These returns are being generated as a passive return. So it's the most attractive way to do it, in my opinion, outside of building a business, which is quite hard to do, hence why not many people do it. I'm a sucker for punishment, by the way. Rental market 0.6, still very hot, 5.4% annual growth across national rents. You know, this is not great news for tenants. You know, I think that's why it's incredibly important to understand what opportunities are out there from a lending standpoint for first home buyers, people who want to get into the housing market and own property, but just don't know how to do that. Unfortunately, for a lot of people, it's just simply not something that's available to them. As of now, they might not earn enough income, or they might not have enough savings. There could be all sorts of variables that come into play that hold them back. So the tenant market's, you know, becoming more and more difficult. The cost of renting is continuing to increase. Once again, it's a supply and demand thing. If we don't have enough houses being built, we don't have enough supply to keep up with the demand of rentals. And I think that this is where, you know, we've been selling properties that are designed in ways to be able to lease to multiple tenants under the one roof within their own private sectors of the home is so important. I think it's the way forward, because people can't afford to rent whole houses these days, and there's too much competition. So we can provide a house that's got a bedroom, a bathroom, a living area, a backyard, and some cooking facilities, and rent it for $350 to $400 a week as opposed to $600 a week. That's a great outcome for a tenant. So as a landlord, what I'm trying to say is that not only can you generate a healthy return for yourself, which is what we invest for, but you can also help in providing more supply and more product for tenants who need help. The government's not doing a good enough job, in my opinion. So the private market needs to come to the party and you know, hold it up, which is usually the case. So yeah, point 7, government. Look, there are some good things that the government are doing. I think they're not being advertised well enough, so people, you know, don't know enough around what opportunities are out there. I think Help to Buy is a good opportunity. The first homeowner deposit scheme, where you have a 5% deposit and the government will secure or go guarantor essentially for the remaining 15%. So you've, for all intensive purposes, putting a 5% deposit forward, however, not paying lender's mortgage insurance because the bank is being protected to the value of a 20% deposit. So that's a really good scheme. The Help to Buy in the equity, shared equity arrangement, government shared equity program is also potentially a good opportunity for you. You know, the government will go into partnership with you to buy a property, meaning that you might have 60% equity, they might have 40% equity. This means you pay less as far as a mortgage is concerned, and it doesn't cost you as much from a deposit standpoint. this could be a good opportunity to get you in a market. Once again, let's get you into the market. Let's give you an asset to start using and utilising to leverage into more assets down the track. The quicker we can get out of the rental rat race and into the landlord world, the sooner that we're going to be able to create an opportunity of financial freedom for you. There are other schemes out there. Tapping into super is one way that you can do this now. You can go into shared equity arrangements where you can tap into your super to pay for all deposits and you buy the house as an individual. If you want to talk about that kind of product, it's something that we've been doing for 3 or 4 years. Would happily help you explore that opportunity. There's afford assist programs where you may be able to get into buying a property for only a 1% deposit, which is obviously incredible. We can assist you in providing those solutions as well if it's a fit. So what I'm essentially saying is don't sit on your hands and think, well, I can't do anything. At least find out, because maybe we can introduce you to an opportunity that will fit for you. Well, I can't guarantee that that will be the case, but it's better to try and find out than sitting there idle and not doing anything about it. And then point 8 is really just understanding what the outlook is for the year. And, most people are predicting a little bit of slower growth. I do concur with that feedback. I can't see Perth, Brisbane, South Australia continuing at the rates that it's continued at for too much longer. Maybe it will continue on for the rest of the year, only time will tell. But I think there's every chance that it will need to taper off at some point in the near future. The opportunities that I see existing for people at the moment is certainly within Melbourne. I think the southeast is generally considered as the premium corridor of Melbourne. The inner to middle ring north is also generating good opportunities. And I think the west has good opportunities too, because affordability is more prominent there. And there's a lot of tenants needing housing within that corridor. I think the Westgate tunnel expansion finally has been completed and is now operational. It's definitely cut down travelling times in those areas, which I think is a valuable asset. And it also brings Geelong into the play, Geelong and Lara as well, as travel times drop down, meaning that Melbourne is more accessible from those locations, and people will look to those locations for affordability when it comes to getting back into the market. So all in all, there's a lot happening within the property space, and going back to that supply and demand law, I think if you look at Australia as a whole, the population is growing at a very quick rate. We're still very much a developing economy. Looking at house prices in different countries and population growth in different countries and how long they've been around for in comparison to Australia, we're still quite young. We're still quite young, and I think there's a lot of growth to come. If we have this conversation 10 years from now and you say that the median house price in Melbourne is going to be $830,000, I'd be extremely surprised if that was the case. I think you'll be expecting it to sit 1.2, 1.3, maybe even up to $1.5 million. Time will tell, it's a bit of a guess, but the reality is that the longer you've got assets, the better you're going to do. So that's the 8 points. I hope that that helped and you enjoyed that. I did say that I would touch on the product range that we've been working on quite a lot, for years to be fair, but I think particularly in the last 6 months we've built some very great relationships with particular builders who have been in the game for a very long time, who deliver a good product efficiently and very cost effectively. I think we're in a very price sensitive market now. Being able to deliver products that are affordable and are very sharp from a price standpoint, I think is probably more important than ever. So I'm going to go as far as to say that, of the nature of our business and our competitors, I would like to think that we would be probably the sharpest price point in the space. If we're not the sharpest, we're going to be a very close second. So that's one thing that we've been able to deliver in recent times. The second thing is the advancement of the designs that we've come up with. Designing homes that meet that demand of being able to lease to multiple tenants and generate a better return for the investor, whilst also delivering a better product and price point for the tenant, is something that we've done really well. The challenge when we go into full rooming house spaces is that lending can be very difficult. Council approvals can be very challenging. They can be very difficult to work with depending on which council it is. You've got to be very careful from a compliance standpoint. and it gets quite complicated. I think the thing that I've really understood more and more over the past 3 or 4 years is the rules and regulations and the lending compliance that all come together to either make a deal very possible and easy to do or very difficult. You know, our products have evolved considerably to a point where we can now deliver, you know, better rental returns very easily without having to go through the full compliant, or we go through the compliant section, but not to the complex levels that it has been in the past. We've delivered products now, you know, which work through those a lot easier. And I think it's a really, really strong point of difference to the rest of the market, and something that is worthwhile exploring if you want to invest. You know, I still stand by the fact that I think building new is better than buying established. Obviously, that's subject to the position of each individual, and we all have different goals. You know, but I've invested a lot of time and effort into this new home space because I think that's where the best opportunities exist. For first home buyers with ambition to build portfolios, and mum and dad investors who already have an asset, or they have a family home, which I think is a liability, but want to utilise that to be able to expand into more assets. So if at any point in time you want some guidance, some feedback, I'd like to think that we're a very friendly team, and you know, there's a no bullshit kind of approach to what we do. If you want to have a chat with us, you know, please reach out, and we'd be more than happy to help. So that's all for the first episode back this year. I hope that you've enjoyed it and got something valuable out of it. As always, be brave, go above and beyond, and back yourself, and we'll see you on the next episode. Thank you.
Thanks for listening to the Property Now podcast with Matt Ellul. We hope you learned something valuable and enjoyed the show. Should you wish to reach out to us, you can do so by calling 1300 289 324, or you're welcome to email Matt at hello@buyfairproperty.com.au, and he'll be more than happy to help however he can. Have a great day.